workshop. And this is the disclaimer that I am not a SEBI registered advisor and you must consult your professional financial advisor before any investment. Rules as usual, and new information is we'll keep the stocks maximum between 25 to 30, and maximum amount which will be invested in a specific stock will be maximum 2 lakhs, and the target is to gain 20% this year. Well, on the 5th January 2026, how the trade will look like. So you already must be aware of the US Venezuela conflict. So it's a no brainer that the crude oil impact will be visible all over the world. The impact to China is significant because a huge investment happened over there by China, but that doesn't mean that India will be spared. So who all will be impacted in India, or specifically on the 5th of January, is the matter of fact. Well, then the first one is the crude refiners. So whoever is buying the Venezuelan oil and doing the refine is basically going to, we have some uncertainty than defense, because the way in US intervenes with the other countries personal matters is really worrisome. So that will give a bit of a conviction the countries to invest more into their defense spending. Then rupee weakness. So by this time already rupee already catching up above 90. That means small cap stocks are going to be impacted or hammered furthermore. Then the bottom fishing, meaning which stocks will be lucrative to grab or take a bite is the matter. So if we go specific, so the companies like Reliance, Chennai Petro, at least that those two companies come into my mind, who are using the extra heavy crude refiners, using the extra heavy crude for the refining. So they will be definitely impacted. So this basically Reliance is a huge giant company in Nifty 50. It is definitely going to drag down our index to a bit, and the cascading effect will happen to even mid segment and small segment, which that looks like. But there is some positive side for ONGC, because after this conflict is settled down, then probably the contract that ONGC had where there are some unpaid dividends that ONGC is about to get, probably there will be a pathway or a future clarity on that. So around $500 million gain probably ONGC will have, and then maybe they will get or will get opportunity to make more business over there. So this is a positive side in long term. Then oil marketing companies like IOC, BPCL and HPCL are going to be impacted for sure. We need to see how severe it will be. Then the companies who export to Venezuela, like specialty oils are exported by Gandhar oil to Venezuela or other countries, probably will be impacted. But then again, there will be some sentimental factors like Hindustan Petroleum and all, where there will be correction, meaning there will be no much impact by per Hindustan Petroleum, but definitely the stock will correct a bit. That could be an opportunity for bottom fishing. But the good part to Indian companies, especially oil refining or oil related companies, are that we are diversifying both Western oil as well as the Russian oil. Even we are buying quite into the Middle East. So because of the diversification, our overall impact will be quite minimal. So that means if on 5th of January we get a significant correction in stock market, within 1 or 2 days this should recover. So probably stay put and try to grab opportunity if you have missed it before. So that's all for this video, and thanks for watching this video. Please support and motivate and like and subscribe. Thank you.